Greetings, Jedi traders. David here of Trading Fibs to bring you the state of the indices weekly recap and outlook for the week finishing up January 8th, 2016. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only to support your knowledge in the market. See what's going through my head on any given day. Always make sure you have a solid trading plan and always manage your stop when placing a trade. Well, welcome 2016. Boy, what a week it was as our market got off to a roar to the short side. Chinese markets in the news, circuit breakers halting trading 2 days later, having them removed. Made for one heck of a wild ride down. U.S. attempts by the all attempts by the U.S. markets to rally were simply just fruitless as the markets closed out three open gaps. That's right, three open gaps to the downside from back in October 5th, 2015. An article I previously had written at seeitmarket.com. So, with unfinished business being closed out to the downside, oh man, we got 50 more weeks of trading. Who knows what will happen, but probability of moving back to the upside even greater. Until then, we are always ready in both directions. So let's jump right into the market as we have the market profile here, taking a look at the TF Russell. That's right, Monday, Tuesday opening up after a holiday weekend and into the market. It was all sideways. Weekly opening price 1110.9 all the way down here to the lows around 1040 as we are simply leaving open gaps up above. These are market profile again based on time, but please note from the charts here, daily gaps again, not one of the fundamentals in what I look for when looking for a setup. However, when open gaps exist in the market, it is an identifiable line, something I look for as price action is headed down there or up towards a daily gap. As long as I'm in trend on most of my charts, that is a key line that I'm always looking for, and something I've talked about for months now, knowing that we would go and close out these daily gaps. We'll look at that a little bit later on in the bigger picture. So here it is, TF Russell again, a couple days sideways and each day moving down, gapping down below, and then finishing out here at the lows of the week, a 1043.6 as we head into next week. The question at this point is each dashed line representing a closed gap, solid lines representing still open gaps. We move the chart up a little bit. We can see plenty of lineage above. Good news is not much below. So the more the market moves down, hopefully at some point the market will rally, hopefully not leave any open gaps in its trail, as we know that open gaps on the indices always eventually will get closed. Let's jump right into the market profile here for the YM as price action. You can see also similar sideways on Monday and Tuesday, Wednesday right there in the middle, Thursday gapping down, and Friday. FOMC minutes were on the table this week, and so there was release on Wednesday, petroleum reports, and as we head into next week, more econ data. There's your range for the week. 17,029 was the weekly opening price, finishing down here at the low 16,233. Again, closing out former daily gaps in the turquoise white line are the daily gaps from this week. So again, we are taking care of unfinished business. YM, let's see how far we can go down. There it is, 15,726. Downside business, still a little bit of room to go on the YM. NQ, here it was, same picture, Monday, Tuesday, Wednesday, there it is, Thursday, Friday, finishing out around the lows here, 42.6250 with an opening weekly price up here at the highs around 44.8425. We kind of kicked it up on Tuesday a little bit, but it was all the rest of the week downside all the way down here to close it out. Nice long range for the week. ES, same here, Monday, Tuesday, sideways, Wednesday in the middle, and Thursday, Friday finish out here 1911.75 after a weekly opening price at 2,000. Holy heck, almost a that's right, almost a 100-point drop there. All right, and finishing up here on the crude, we could see price action again, a little bit of action from last week. Monday, Tuesday was downside. Wednesday, Thursday, and then Friday down to 32.88, finishing. Man, whoever thought crude would be coming down to these lows? Major move this week from 37.57 all the way down to 32.88. Do we have any open gaps downside? Absolutely clear to the bottom. It's all back to the upside eventually at some point. Let's go back for a second to the ES. We said downside open gaps. We do have a line down here, 1874.75. However, the ES did close out a major gap today. We'll go ahead to the daily charts in a little bit. NQ, any unfinished business below? Let's take a look here. 40.74.75 all the way down to 39.97.50. That's a major line still to go down there on the NQ. Now, doesn't mean we can't rally up and then eventually come back down, but unfinished business is unfinished business. The market likes to take care of itself. Market profile, jumping to volume profile. Again, volume profile, one of my preferred charts to look at when it comes to how much was traded at a certain given price versus time-wise. You can see used on a daily basis. We also clean up unfinished business here on the crude. We could see plenty of lines to the upside here on the crude as we continue to work our way down, each closing out each former point of control, price action during the day, moving into that value area between value area high and value area low. Where does most of the price settle in any given session? Around the point of control, and the price will move away from there the next day, perhaps come back, close that out, and move on. So a wonderful chart to always have on an intraday basis. Here we are on the TF Russell, again leaving plenty of room upside. Please note on your charts, 1140.3 is the 600-day macro point of control, volume point of control that eventually, once the market does rally up, should find some balance around that price, 1140.3. Working ourselves down again on the daily gaps, nothing much to talk about as there are no lines, but 10.25.20 within the last 600 days, we do still have an open point of control. So Russell still has room to come down here, close it out, and let's rally at that point. That would be a good time to rally. Again, I can't tell you that that's where the market's headed. All I can do is trade on an intraday basis, look for the setups in both directions. YM, we have actions going on in both directions. Please note on your charts, 17.60.34 is the open point of control there, the major VPOC, 17.634, 600 a day. We both have lines to the downside as low as 15.744 in conjunction with the daily gaps. Again, on an intraday basis, seen between the volume area high, volume area low. And looking forward, do we have a strong, looking for the outliers, do we have a strong value area high? Do we have or do we have a weak value area based on was price action able to push above and outside the 70% area? And lots of times markets will have to come back and repair that if they didn't form a profile that was defined as it should. NQ, we're moving down here. 42.62.75 is now the 600-day macro VPOC. So again, finding some settlement down here. That's key, as we do have some work to still do on the NQ to the downside. I hate to tell you this. 35.7750 seems to be the numbers to the downside. Remember, here back on the market profile, we still have daily gaps all the way down there, 39.9750. So we might just be headed into the high 3000s. Can't tell you when that would happen, but eventually it could. But please note on the charts around this number, 42.6250 is our 600-day macro volume point of control. And wrapping it up with the ES, again, our point of control up above 2075 600-day period. Not much work to get to the bottom. We've been doing pretty good, closing out former VPOCs, these extended lines here on the chart, closing them out, and forming a weak value area low down here. So we repaired that today as price action moved down 1911.75 down here. Point of control down here at 1938. Price closing out at the lows here of the volume profile, 1911.75. All right, so let's jump in right to the long-term TF as we look at the technical bias in the market. I think we can all tell by the previous week where price action has been moving. It's pretty much to the downside, starting in the upper left-hand corner in the bottom chart. We have more of our swing position here as price action is now in the red. Heikin Ashi bars downside. We have moving averages crossovers on the 4-hour charts. And we can see here again that the bigger picture on the daily is to the downside after a week of price action downside. Reject here at the 50 period moving average on a daily. Key significant line volatility to the downside. Price action under the 5 simple moving average. Again, it's been a while. Taking a look at our weekly chart after almost a month and a half. That's actually 2 months, November, and now we finally cross over to the downside. Does that mean next week we're headed to the downside? Absolutely not. It just gives the technical bias. It says any intraday move to the downside might have greater strength based on the fact that the bigger picture is to the downside, but that doesn't mean we can't simply rally up. Let's go to the Fibonacci lines again this week. Closing out, that's right, closing out. It didn't take long. Let's go ahead and draw that right there, back from October. There it was, 10.505. It didn't take too long. Last time to close out a gap, we had to wait almost 8 months, but right here, right at that 11.095, we closed that out. Go back Friday, Thursday, let's see, Wednesday. It was at the beginning of the week, 11.095, but it was all the Russell downtrend from there as the market moves down. So again, closing out that open gap from October 5th, 2015, and the market in a Fibonacci extension here, hitting each former fib line. Next target downside 1033.1. It's all about the intraday action. Again, notice these shaded out areas. These are again open gaps. When we talk about open gaps, again, I mentioned here, article I wrote back in November, the beginning of November 2015. That's right, first lines. Many investors may not want to hear this, but I think the market will retreat. Why do I say this, and with what guarantee? Well, I never have a guarantee, but knowing that the market had open gaps down below, we were talking at that time in November. I was looking at this open gap that I just mentioned about. Back here in October, as the market was rallying up, said at some point we're going to come back and finish and close that out. Now, the TF Russell, as we saw in the market profile and the volume profile, doesn't have much more room to the downside. As long as price action continues to the downside, at some point I can tell you the market's going to rally and come back up and close out these daily gaps as well. So we look forward to that price action as soon as it turns around. What will give me the sign that we've turned that around? Well, that's where, again, I'll start to look at some of my smaller time frames, the swing positions, crossovers, change to the upside, breaking back up above the 51.44, and eventually the last ones to turn around will be the bigger time frames, the daily, the weekly, and the monthly. But you know, we go back to over the course of several years here and say, you know, this is on a weekly basis. We were, as much as we wanted to say there were some down weeks, weekly trends over the course of the years. Here we have 2012 Fibonacci extension draw. Look at that. We were in an upside trend market. So right now, we can say with some positive identity, the market has shifted its bias to the downside. How long that lasts? Well, that's all based on the big players in the market and the overall technical setups that we have here. Again, fundamentals always, but technical setups right now are to the downside on the TF Russell. Let's look at the YM. Very similar picture as we see the YM moving to the downside. Here, price action crossing over on the monthly for a while that we've been there. But now we got a Heikin Ashi bar that's starting to trend downside for the month of January. Weekly just about to cross over with the daily, but let's jump right into the Fibonacci. That's right, it was all today Fibonacci draw with an open gap right here at 16,302. We did, that's right, it didn't take long again like the other indices to close that out. So here we are, 16,302. We again, remember back on the market profile, we looked at downside targets for the YM. We still have 15,726 down here. And then if we jump over to the volume profile for for the YM. We also have some unfinished business below that would take us downside on the volume profile. But again, it was the closeout of the YM open gap right there, as written back in November 2nd in that article that I posted. Jumping into the NQ, it was so close today, so close, as we are continuing to leave open gaps up like the rest of the market. We'll jump here in a second, but again, 75 tick chart, bigger time frames to the downside, 4-hour charts also to the downside. Weekly has not crossed over, daily has not crossed over. Volatility here underneath the 5 SMA as we continue to the downside. So very bearish overtones here on the NQ, and oh so close. I said 3 markets closed out. It was not the NQ, but also close there, 42.6275. Daily open gap from October 5th here down at 42.5175. Thought we'd go catch it. Almost coming close to some of these lows a couple days after, but we should get that next week. I have no guarantee that will happen, but eventually we will. And likewise, open gaps up above mean market rallies have room to move up and close those open daily gaps. Let's finish here. Oh, we got the ES and the crude here. ES, one of the only indices here now to cross over on a weekly and a monthly breaking trend of the 61.8. That's a key significant Fibonacci retracement, knowing that price action now might continue to lean downside. And what do we have downside? Well, again, we just have to go to our market profile on the ES, look for any more open daily gaps, 1874.75, and volume profile on the ES as well that we saw before to the downside. Still a couple open points of control, 1866.25. So let's going back to the long-term ES again. 100 tick range chart downside, 4-hour charts to the downside, monthly's downside, weekly and daily are all downside. So out of all 4 major indices, the ES and the TF pretty much signs to the bear side. Again, it was the ES closing out its gap this week, 1934.5. How about that right there? Open gap, market takes care of unfinished business to the downside. Yeah, we had open gaps up here, but market rally, closed those out, and down we go, but leaving open gaps in the trail. Let's jump right into the crude. Last market to look at here today, is we did have a little bit of a price rally here on the swing position here on a 100 tick range chart and 4-hour chart. Market action popping up, but again, now we got the bars coming back down in sync with the rest of the charts. I think you could clearly see the color red. The moving average crossovers all the way downside on the majority of the charts, and leaving with a Fibonacci extension that the market for oil crude has been continuing to run down here as the target 28.22, a 261.8 Fibonacci target. But here we also notice on the crude leaving some unfinished trails upside with open gaps. So at some point you can be guaranteed crude will come up. I can't say it's going to be now this year. Could be 2 years. Could be could be 3 months. Who knows? So that's where we go to the intraday charts to assist us in our entries. All right, so when that wraps up as far as the recap and the outlook, again, the outlook for each of the individual indices is always comes down to the intraday basis. We know that the volume profile, we have lines below and above. The market profile has lines below and above to close out. Using that on an intraday basis to see where the majority of buying and selling is going on in conjunction with the long-term basis, waking up each morning, doing a technical analysis by looking at the technical bias on the charts, doing analyzing, do I have mostly a bearish overtone? Do I have mostly a bullish overtone? So this is one of the charts that I post each morning, again, with major open gaps. If we close them out, again, coming darn close to that NQ today, but YM, 3 gaps right there, closed out today. And again, plenty of room to the upside. But again, having an idea of what is the overall overtone to the market, and then always going to the intraday charts. And, you got to be ready for both directions. You can't say, well, just because we have a bullish overtone to the market, I'm only going to take trades to the bull side. Well, you'll miss out on some trades. Always looking for as many charts in sync, looking for the moving average crossover, looking for the 534, looking for the higher time frames, even looking for, and again, one of the key main charts that I use each day. The 5144 here, you can see as much as important as the bigger picture is where is the 5144 in relation to one another, and are we bouncing off the 50? Where's the 50 and 144 relationship to one another? Obviously, you could see the bias for most of the day here on the NQ. Even though we had a little bit of price correction coming up side here this morning, the rest of the tone for the afternoon was all to the bears as price action attempted to get and push up above the 144 without any success, which assisted in entries to the upside, like we just saw here on the chart. Again, this is the mid-session for the market, and then overtones to the downside as price action came down in the afternoon session. So again, 5144 was bearish. Big picture was bearish. That offered plenty of opportunities here on each of the sell signals to the downside on an intraday chart. 1, 2, 3, 4, all the way down, together with the 5144, give me all four charts in the red, making for numerous opportunities or numerous setups. Whether you decide to take them or not is up to you. All right, so check out that technical bias charts that I post each morning. Looking ahead to next week, economic calendar, we're taking a look at multiple Fed speakers. We have, let's see where I had it. We always have our gas report on Wednesday. Pay attention that natural gas seems to be a mover lately. But beige book on Wednesday leading into the next FOMC meeting. Whether they decide to raise interest rates or not, that's obviously in the future. I want to give a shout out to a new website, newsletter I get in my inbox here. Kenny Polcari, probably been around for a while, never read his stuff, but one of the trading room members forwarded that to me this week. I wanted to let you guys know, not bad stuff, kind of entertaining to read in the morning. Gives a awesome recipe as well. There it is. Eat up with a end with a recipe to serve the mood of the markets. But gives a good overnight analysis. Light to read, light reading, and nothing too heavy to get you started for the day. Again, if you never checked out my article on stocks set to reverse course, check it out here at See It Market or on my website, tradingfibs.com. I'm going to go ahead and do an update on that to obviously did exactly what I thought would happen. We closed out those gaps, and stocks, question is, are we ready to reverse course at this point? All right, that concludes this week's insight and recap and outlook for next week for the state of the indices and crude. Feel free to stop by at tradingfibs.com or any of my social media outlets to obtain more information. My mantra of one simple strategy: any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter at Trading Fibs. And as always, I really do leave the crystal ball to the experts. I really don't have a clue where we're headed next week. I like the idea that we closed out some major open gaps, but it's the intraday charts that I look for setups. Leave the bias at the door, even though you have a technical bias that shows a certain direction in the market. That's where my bias is. My bias is on my charts. What's in front of me? If I see the sell signal, the buy signal, and I have as many charts with the highest probability of success, you never know which way trading is going to go. You also have to know sometimes when to sit out and let the market do what it does. That's it, guys. Have yourselves a great weekend, a Blue Zone weekend, and good day, good night, and good trading as we head into week 2 of 2016. Peace out.